Hey, welcome to the Closing Beat, everybody. Happy Friday. Hope you're having a great day here so far. It's Friday, man. Let's go over the stock markets. This is just a quick show that we do to cover the stock markets, good, the bad, and the ugly. And boy, it's been a wild week here so far. So if you've been following along, whoa, you can go have a good weekend now and relax. We're also playing a game here. It's called Guess the Dow. You can go right on the website there, and it's at the bottom right-hand corner of your page, and you can just guess where you think the Dow is going to close. You have until tomorrow about lunchtime to guess where you think the Dow will close next week. So if you haven't played the game yet and you're like, I don't want to wait, I just want to kind of guess for next week, you have until tomorrow at lunchtime. You just go right on the website there, place your guess there, and whoever's the closest without going over will send you $100. It's a gift card. If you're one of our customers, we'll credit your account the $100 if you'd like. And so that's that. Hey, hold on. That's better. Now you can see me a little bit, huh? Okay, so our winner this week is actually Caitlin. Caitlin M. She was the closest without going over. Very, very close, actually. Did I pull up her, let's see where her guess was so you guys can compare it with everything else. And I got to tell you, there was not a lot of guesses much lower than this. So obviously a wild week in the markets there. Kind of fun to watch and see, like where if you kept track of your guess to kind of see where you landed there. Let's see, old Caitlin. She was, there were so many guesses here. There were 113 guesses that were higher than where Caitlin guessed. And so she had a guess of 26, 267, 77. So that'll wrap it up for her. She wins the $100. We'll send you an email here shortly if it's not already on the way, and we'll get a gift card out to you. So I appreciate that. Also, there's no marketing or anything. Literally, we're not saving your email addresses or anything. You just put your guess in there. I get a report of the guesses and all the data behind it, and that's really it. I mean, it's over. From there, we just delete everything and start the new game over again. So. Enjoy. Yeah, have a good time with that. Last night we did our class on the nest egg here in the dojo or in Jazz Wealth, kind of covering the profile tab. Holy cow, the amount of you that actually decided to go in there and take that seriously and start putting your plan together, overwhelming. I really did not expect that many to dive in there, but awesome class. We're going to keep expanding on that because I really believe that if the markets do return less than expected over the next few years, as Vanguard and JP Morgan and Morgan Stanley and Goldman Sachs is even telling their high net worth customers to expect lower returns. Well, if that's the case, then we got to get our dough straight. You're going to see soon some of the things that we're sort of launching to help our customers just get their personal accounting in order while the investments hopefully I'm wrong and the investments, everything just does well and the markets have a good move there. But if for some reason you've got your entire nest egg and this part's going to be sort of sleeping a little bit and not generating those returns, well, we got to go make the most out of this over here. And at Jazz Wealth, that's what I really, really believe in that. We help you with your personal finances as well as your investments. We're your financial advisor, right? So anything I can do to help you along the way. I get questions all day from all different types of people, of our customers that have these questions. So happy to help with that. All right, it's Friday. Let's do this quick here because you guys probably got better things to do. You got the Dow lower by 90, S&P lost 19, and the NASDAQ lost 80 on the day. Sort of a ho-hum day, right? Remember, I'm the guy I want to tell you ahead of time versus tell you later. A financial advisor should always be able to tell their customers ahead of time what is expected, what is projected, what they think is going to happen, rather than say, oops, sorry, I didn't see that coming, right? So yesterday and the day before, we've been walking you through this market here just little by little to explain sort of how you think of the next day. Right? And so if we go over to the S&P 500 here, you could say, yesterday we talked about bonds giving us the hint, right? They gave us the hint yesterday that today would be that sort of ho-hum back and forth day. I mentioned it numerous times yesterday to try to drive the point home that you don't expect the markets to blast off today. You expect them to sort of wiggle around, maybe a little lower, a little bit higher, but you didn't expect any fireworks today. It's exactly what happened, although we did start lower. I mean, it was a decent down day, and we did get a little sell-off into the close, but you're basically here. You've met your short-term resistance in the markets. We've been talking about this yesterday. I won't go over it again here today just to sort of beat a dead horse, but remember, bonds gave you that hint. The day before, semiconductors and tech gave you the hint of the strength in the market. Always look forward and try to see what is your expectation for the following day, for the following week. If you're one of our customers, we go out a whole month and we say, this is what we're expecting for the next month. Here's what happens and here's what's given us those sort of viewpoints and everything. Really important. And the more you sort of pay attention to this, not saying you're a day-by-day trader, but the more you pay attention to it, the more you just start to see it. You go, okay, I see what's going to happen tomorrow. I just know it. You can get that feeling. And just like to point those out to you, just so you know what things are happening, or how things are happening there. All right, next week we've got the wrap-up of earnings season. Walmart's going to report on Thursday before the markets open, and that's sort of technically the end of earnings season now, how we define it. Remember, we started earnings season by illustrating how does earnings season start? What does that mean? What are we focused on? And then we talked about how earnings season would end. Well, we've come to the end. Walmart will report on Thursday, and so that'll take care of everything there. From there, after that point, earnings season still continues. It's just largely retailers and a lot of little names that report. We've had about 2,000 companies report already, so we've knocked everybody out basically, and it's just left to a few companies left over. All right, out of the companies that are so far had a really good earnings season, tech companies, the technology sector has the best beat rate, right? Meaning when I report every day, so-and-so beat on earnings, they beat on revenue, they raise their guidance, things like that. The tech companies have had the best out of all of the other sectors combined there, so they've done really well. And interestingly, utilities, for some reason, utilities had the least number of positive earnings, but yet utilities is one of the best performers there. So we'll go over that. Let's just jump into the charts and do it here. So here you go. You got the S&P 500. Can you see it there? Okay, yeah, let's move on. Let's go to the Dow. All right, so the Dow on the day, very much, like I said, ho-hum day, back and forth, kind of, not all that big of a deal. After all of this, for the entire week, the Dow's essentially lost a fraction of a percent. I mean, less than 0.5% after the big drop on Monday, all the wild back and forth. Basically, it was flat. Most people would say the Dow was flat on the week. McDonald's was one of the better performers. Again, we've been kind of pointing the strength areas out of the Dow. Not hard to find. There's not many stocks to look through. And so McDonald's, one of the better performers there. And today with the trade news and sort of Donald Trump saying, well, I don't really care if there's a trade deal. We don't need to talk in September if we don't want to. No, by the way, that's him backing away from the table. It's a strategy right out of any business book, or mainly him. I mean, he wrote about it the most, about just backing away from the table right before you have something that you think you might want to accept. This is just him backing out, right? He's just saying, we don't need a deal right now. And so that could be that the Chinese have said, well, here's what we want to do. Do you guys want to do something like that? And rather than just say yes, he said, we don't need a deal, right? Just playing tough. It doesn't matter to me, but you get that could be a possibility. So some of those trade comments really hurt the trade-sensitive areas. And if you're looking in the Dow, you notice maybe Caterpillar lower on the day. That's going to be trade-related. Caterpillar was specifically mentioned by him in his sort of little speech there out at on the garden there. Intel lost 2.5% on the day. Semiconductors struggled a little bit, but in the Dow you had IBM also a little bit lower on the day. Again, just a little bit of weakness there. If we look at the NASDAQ 100, all in all, it's the same thing. Back and forth, wild week, and nothing really happened. We're reporting next to nothing as far as performance on the week. AMD stands out again as one of the gainers. It poked to new highs there, continues to enjoy the publicity, the excitement wrapped around the new deal with Google and their streaming gaming stuff. The new chip that they're announcing there, Twitter starting to work with them. All of a sudden, it makes AMD seem like the top, right? Intel used to be the dominant force, and at least this week, you've got AMD just wildly stealing the headlines there. Intel almost not even mentioned throughout the week. You're also going to notice Broadcom was higher today by almost 2%. They did buy the security division for major companies. They bought that division from Symantec, and so that's all official and sort of that enjoying the move there. On the downside, you've got Kraft Heinz still working off the bad earnings there, hitting new lows, now at $26.50. Got a lot of analyst downgrades there, way too late, by the way. I mean, now you downgrade the stock after this whole time, so just a little bit of analysts playing catch up there. Monster Beverage down 5%. That was a wild day yesterday on earnings. You got a lot of commentary from analysts out there about them being slow to the punch to continue to innovate and try to compete with their larger competitors that are out there. They're having a hard time competing, or at least that's what analysts think. And then again in the NASDAQ, you've got the semiconductors. That's going to be a highlight here for a moment. Texas Instruments lower on the day. Xilinx, if you happen to look into those, all just weak on the day, lost 5% there. In the S&P 500, we're flat, right? Same thing. The market's lower, higher, all this stuff. We basically finish out the week flat. Trade-sensitive names in the S&P are going to be your focus, largely retail. PVH, this is Calvin Klein and others. Tommy Hilfiger, I believe. That hit new 52-week lows. Capri, which is Michael Kors. I don't know why it used to just be KORS, and then they got with these guys. This is Capri, new 52-week lows there. Under Armour, there you go. Under Armour lower on the day, and then, things like, I'm sure Limited Brands was in there. 3.6% to the downside for Limited Brands. A lot of retailers, and actually we'll just move on to that for the sector news. You got retailers lower on the day. Hey, I mean, trade comments affect this area. It's just a bottom line. For the week, it's closed out down 1.5%, although prior to today, you can just see it there, it was just flat. Right, so prior to today, it was basically okay. It recovered, everything was good. Well, the trade comments come out, and unfortunately, it finishes down the week 1.5%. Continues to be a really weak sector. Semiconductors as a whole, use the SMH if you want to take a look at those. We've already pointed out the individual stocks that were a bit weak, and you can kind of look at the sector if you like looking at that. It lost about 1% on the week, so not horrible, right? A little bit of a pullback there. Gives you sort of guidance going into next week as well. Crude oil continues to recover here, 3.33%. If you happen to own oil or have recently bought it, you'll take it. You've been excited about that because oil's been a little bit of a tough one to deal with. You know the numbers that we report on Wednesday. And I say on Wednesday, oil inventories were down or higher than expected or whatever it is. Well, we essentially got the same thing out of Europe. And so all the focus was over there. That there was a major drawdown versus what was expected in the European supplies of oil. And nobody expected that because in Europe, there's actually been this really consistent drop in demand for oil and oil-related products. So their version of our number that comes out on Wednesday came out. And so that's that one there. It's still down just about 1% on the week, crude oil anyways. So it's been kind of a wild week for that one. I know you guys like your REITs. I'll use ICF today. How about that? We can use any of them here, but REITs getting back towards highs was the biggest week-over-week mover in terms of sectors in the market. So if you look at all the sectors in the market and you go, which one had the biggest move one way or the other, that's going to be your REITs. Second place is utilities, which again is sort of funny, right? Because most of the utility stocks didn't have good earnings, right? But people go, I don't care. I just want to be a part of it because it's all, I don't know what's going on with the market. I want the defensive play. I want that interest rate play. Rates are going lower. I want to be in utilities, things like that. So that was your second biggest week-over-week mover, although, look, only 33% of the companies in this sector beat on earnings. The rest of them struggled, so kind of interesting there. On the downside there, you got XLE, that's energy, or what I like to use for energy. You can use anything, really. Any energy index sort of ETF. Down 1% on the week. That is your biggest week-over-week mover to the downside. And then XLF is your second biggest mover to the downside. It just really never recovered from that drop on Monday. It just kind of sort of floundered around there. And so because of that, that'd be your second worst there. One thing that I haven't pointed out, I'll start to point out here for you. If you look at commodities as a whole, so a lot of people use commodity-based ETFs or mutual funds. They want to participate in all of them. You got a huge spread in this area right now. You're almost better off going and hand-picking the individual commodity. Well, you are better off hand-picking the individual sector commodity that you want to play. So commodities as a whole, that includes oil, gold, silver, copper, all these things, agriculture. And when you look at the index, look at just the performance here. Not much going on. And you might think at first glance, okay, there's nothing to do here. But we've talked about this. You've got gold hitting highs, right? Very, very strong. Silver hitting highs, very strong. Agriculture even, I use MOO to look at that. It's not my favorite sector, so I don't look at this much. But not bad. You got a very distinct difference between commodities as a whole and agriculture there. On the downside, it's energy. You can use DBE, XLE, whatever you like. Energy holding you back as a whole. Natural gas holding you back, just incredibly, incredibly weak as we go through the summertime here. And then oil, there's no need to really beat that one to death. You know what oil's doing. And so definitely something you want to pay kind of close attention to there if you happen to be a commodity-based investor. All right, let me do this real quick here. What's the best area of the market? If you boiled it down into all the little industries, one by one, you go, what's the best area there? You want to guess? I did this about a month and a half ago, so I just thought we'd follow up with it. It's still solar. Nobody's talking about solar, but solar is actually the best performing subsector or industry group of the market. It's up over 70% for the year. That beats gold, right? It beats gold miners. I keep seeing you guys post about gold miners, 40%, 41% on the year, and that's great. I mean, there's definitely nothing wrong with that. But why doesn't solar get any attention? It's like you never see anybody talking about that. You got aerospace and defense, also one of the better areas, has been one of the better areas, and continues to do that. What would you think is the weakest if you had to guess? There should be no problem to guess. Well, it's oil service stocks. Anything oil service related, whether it's the XOP, you could use the OIH oil services in there as well. That was very weak. Those are down 14% and 12% respectively. And then you've got retail, right? So retail being one of the weaker areas on the year. Now technically it's positive, right? If you look over here, technically since the start of the year, it's positive by, well, it's actually back to flat after today. It's pretty much right smack on the button there. So it's not that it's negative, it's just it hasn't really done much of anything there. All right, I just thought I'd share that with you. I don't know if you guys care about that at all. Let's go to new highs. So you got 45 new highs for the week. That's actually almost a record. 45 new 52-week highs. And of those, you got CME Group again all week. We've kind of, well, almost all week we pointed this one out. It's been hitting new 52-week highs, enjoying that momentum, really that started from earnings there. 4 days in a row, it's hit 52-week highs. And then the REITs, which by now you kind of see how we flow through this sort of class each day. You know that REITs, obviously they've done well, they're doing well, but it's all the same names, believe it or not. Oops. You got Extra Space Storage hit new 52-week highs today, maybe running out of a little steam there. You got Public Storage hitting new highs, also probably hitting a little bit of a, at least, ran up a hill rather quick. It just seems like it's ready to take a break. American Tower, same thing. It's sort of showing that it wants to take a break here with that pullback, at least throughout the day. Welltower being the strongest out of the group. That's also hit 52-week highs again today. And HCP. All of those hit new 52-week highs 3 days in a row. As a whole, utilities had the most number of stocks hitting new highs as well. Well, actually the second most hitting new highs as, in that 52-week high list. And then you got Tyson. Tyson just keeps sneaking back into the news there with their plant-based products and their nuggets that they're working on pushing out there. On the new low list is mostly names I've already mentioned. You got Ralph Lauren. Trade-sensitive names. Ralph Lauren. I didn't mention Urban Outfitters. That one trading to new lows as well. And so, all in all, there was only 9 new lows, and most of them were retail or trade-sensitive things there, so something there. What do we got? Uber in the news. Obviously, we talked about this yesterday, a horrible miss on earnings. Excuse me. The CEO basically tried to blame it on investors. He tried to blame investors that they just didn't understand this company, and they didn't understand how we are going to be profitable one day. I don't know that that was the right response, but nonetheless, it got a little support when he said that. So the stock was still down about 7%. And, they tried to say, well, look, a lot of this was one-time expenses for their IPO costs. Well, look deeper into that. The $5 billion that cost, a lot of that went to pay out their individual executives there. So what do we mean by IPO costs? Because a lot of that got wrapped into the costs that you guys paid for your, to buy the IPO on the IPO, if that's what you did. All right, so let's take a look here. If you have any questions, I'm happy to answer them. Otherwise, we'll wrap it up because it's pretty much the end of a Friday, which we expected and talked about just kind of being a quiet day. If you had to miss any day, no big deal here. UPS in the news, by the way. The Wall Street Journal says FedEx and Amazon splitting up. It may end up benefiting UPS in the long run there. So that's that one. And then Bloomberg mentioned that the Department of Justice is looking into to Alphabet's advertising processes, how they go about things in there. It's just never ending with that over there. So that one was in the news. As a long-term investor this week with all the bad news, a solid week for the market. You expect a bigger drop in the market going into next week? Okay, no problem. I wouldn't blame you for that, right? I mean, it's kind of odd that we just got punched in the face on Monday and we just walk it off like nothing's wrong there. I could certainly understand people that were on the fence. Like if there was a 50-50 vote where it said some people think higher, some people think lower, I could understand that. It's as if the media wanted the markets to purposely take a dip. Yeah, I mean, I'm sort of on the fence with that. I get that they only have so much time to focus on things, but boy, when they choose to focus on something and make it seem scary, they really go to town on it. I would agree. Bloomberg doesn't do that so much, but CNBC, it mastered it, truly mastered it. You like your gold miners and you like your financials. Can't blame you there. Harry says, should we expect a market-moving response on Monday from China because of Trump's restrictions on Huawei? Yeah, there was some conflicting news on that throughout the day. I would expect Monday to be active anyways, and you see people right there at the end of the day, if you follow the 5-minute chart, you see people right at the end of the day say, nope, I'm not taking any risk into the weekend. We've got too many things going on, and we haven't even talked about Iran. I mean, that keeps trying to make its way into the mix and then just gets squashed by everything that Trump says. Well, if we get focused on that, Italy, Germany, right? If we could get that in the main headlines there, I think you'd have some people a bit panicked. But for now, nobody seems to care. Carvanha's making a killing. As a mechanic, you don't really trust their way of selling cars. I bought my last car through Carvanha. I didn't have any issues and still don't have any issues there. And I only did it purely out of spite. I made a video on it because I was like, this is ridiculous, like how this has to work. So I don't have any problems with Carvanha. I don't know of any major complaints in the terms of the quality of the vehicles or anything. But yeah, they're really taking over. I mean, it's really, really interesting, sort of a growth story there if they can keep it up. I mean, to me, if you're like, I have to invest in a company that doesn't quite make a profit, if you had to choose, don't you kind of like what they're doing there? I don't know. I'm a little partial, I guess. Yeah. You're looking at picking a few financials, nice dividend growers. So you got a different approach there. Yep, something that you're looking to do to build your long-term portfolio. I can't complain with that, or I can't argue with that. Jordan says, what age should you start a retirement fund? They always say the best day to start investing for retirement was 10 years ago. The next best day is today. Because every person on the planet, you'll see people posting there, let them know. Everybody always says, myself included, boy, I wish I'd have started sooner. Wish I would have started a lot sooner. I'd have had to save a whole lot less money. Yep. You're 34. Yeah, you want to start as soon as possible. There you go. There's a couple of them. Well, and that's okay, Jordan. So Jordan says, I just didn't have any money a year ago, but that's okay, right? So you start slow, you inch into it. Don't overcommit. This is what kills me about all financial advisors. They go, you got to put as much money away as you can, and they scare you with healthcare, and they scare you with the markets and everything. Don't overcommit to start. Start very slow. I have a lot of customers that just start with $100. I mean, day in and day out, I pull up the new list of customers, and a lot of people just start with $100, and they're like, Dustin, you tell me, what do I need? This is my goal. This is what I want to do. I give them a questionnaire, and they go, this is where I want to land. Now, what does it take to get there? I don't want to put $1 more away than I have to. Maybe their goal, they shoot a little higher or something, but man, just don't overcommit, because I see a lot of people that overcommit in the beginning, and then they go, oh, crap, I actually needed some of that money. Shoot, now I got to go back and try to fix all this. So don't overcommit. You just start slow and steady and just let it roll wherever you go. I'm not like trying to sell us here. I'm just saying in general. Yep. Cool. Yeah, oh, that's awesome. A lot of people were saying how they got started early or got their kids started early. I love it. What do you think about gold? What long-term, short-term, today? Specifically, help me out there. I'll try to guess here. The price of gold has had a great run. In the short term, anybody from a technical perspective is going to say that sucker is overbought. It's an overbought commodity at the moment. And if you're looking to buy it, it's one of those things where you go, all right, maybe I'll get a deal. Maybe I'll let it pull back or rest a little bit before I dive in. If you are an owner of gold and you've owned it from somewhere over the last year, you're probably pretty excited to take a little profit in the short term, but I wouldn't say you give up on it. So that's the best I got. You say my little sister is 18. I've got her a Roth set up already. I wish someone would have taught me that stuff. Yeah. And it's more interesting when the 18, 19, 20-year-old is somewhat into it. You're not supposed to be excited about investing when you're young. I don't think most people are. But when they're kind of into it. And with apps these days, that's what makes it cool. When you can check your account on your phone, wherever you're at, you just check your account. I think that helps, when you can set a goal or something and go, that's what I want to do by a certain day, and your phone reminds you and things like that. I think that's pretty cool. Yep. Matt started when he was 23. Nice. You didn't know anything until last year. You just get better little by little. Add a little bit at a time. Keep learning a little bit at a time. Every Thursday we'll do those classes for you. You just keep learning, right? All right, I'm going to wrap it up there. I think we've covered everything. No need to take any more of your time. I appreciate you watching. Appreciate you joining us here. Have a great weekend, and we'll be back next week. Do this all over again. Enjoy. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.